Hey guys, welcome back to IluMind. Parag Parikh, a legend in the world of investing, wasn't your typical finance guru. He was a man who saw the world of finance through a different lens, one that combined deep analytical skills with a philosophical outlook on life. He was a chartered accountant, but more importantly, he was a philosopher at heart. His unique perspective allowed him to see beyond the numbers and understand the underlying principles that drive financial markets. His book, Value Investing and Behavioral Finance, is like a treasure chest of wisdom. It offers insights not just into the mechanics of investing, but also into the psychological aspects that often trip up even the most seasoned investors. It's not just about picking stocks, it's about understanding human behavior and outsmarting our own biases. Parikh emphasized the importance of emotional intelligence in making sound investment decisions. Parikh believed in looking beyond the hype and digging deep into a company's true worth. He taught that true value lies in the fundamentals, not in the fleeting trends that often dominate the market. He focused on the fundamentals, a bit like detective searching for clues to uncover hidden gems in the stock market. His meticulous approach often led him to discover opportunities that others overlooked. His approach to investing was simple yet powerful. Buy good businesses when they're undervalued and hold onto them for the long haul. But there's a twist. He also believed in the power of patience and the virtue of waiting for the right moment. Parikh knew that investing isn't just about numbers, it's about understanding the quirky ways our brains work. He delved into behavioral finance to help investors recognize and overcome their own psychological barriers. Imagine you're at the supermarket, strolling down the aisles, looking for the best produce. You come across two apples, one shiny and polished, gleaming under the store lights, and the other a bit bruised with a few imperfections. Naturally, the shiny one is more expensive, catching your eye immediately. But which one is the better value? Is it just about the appearance, or is there more to consider? Parikh would argue that it depends on what's inside. The true quality lies beneath the surface. That's the essence of value investing. It's about digging deeper, beyond the superficial. It's about looking past the superficial and focusing on a company's intrinsic value. What are its assets? What does it truly own? How much profit does it make? Is it well managed? Are the leaders competent and forward-thinking? These are the questions value investors ask. They seek to understand the real worth of a business. Parikh taught us to think like business owners, not just stock market gamblers, to see the bigger picture. He believed that if you understand a business and its potential, you can make rational investment decisions, even when the market throws a tantrum. It's about staying calm and focused. Here's the catch. We humans are emotional creatures, not robots. We make irrational decisions, especially when it comes to money. And the stock market, it's like a giant playground for our emotions. Parikh knew this all too well. He understood that our brains are wired to react to fear and greed, often leading us to buy high and sell low. The exact opposite of what we should be doing. This is where behavioral finance comes in. It's like psychology meets investing. By understanding our own biases, we can avoid making costly mistakes and become more disciplined investors. Let's talk about some of those pesky biases, shall we? There's anchoring, where we cling to the first piece of information we hear, like a ship to its anchor. Then there's the herd mentality, where we blindly follow the crowd, even if they're headed for a cliff. And don't forget confirmation bias, where we seek out information that confirms our existing beliefs, ignoring anything that challenges our worldview. It's like only reading positive reviews of a movie you already love. Parikh argued that by recognizing these biases, we can start to counteract them. It's like knowing your weaknesses so you can train harder in those areas. Patience, young Padawan. Long-term thinking in a short-term world. In a world obsessed with instant gratification, value investing is a bit like slow cooking. It requires a different mindset, one that is willing to wait and see the bigger picture. It takes time for a company's true value to reveal itself. Just like a plant needs time to grow, a company needs time to develop and show its true potential. Parikh believed in patience, discipline, and tuning out the noise of the market. He knew that staying focused and not getting distracted by short-term volatility was key. He compared investing to farming. Just as a farmer plants seeds and waits for them to grow, an investor must be patient and give their investments time to mature. You plant a seed, you nurture it, and you patiently wait for it to grow. This nurturing process is crucial for both farming and investing. You don't dig it up every few days to see if it's sprouted yet. Constantly checking can actually be detrimental. Similarly, value investors don't panic when the market dips. They remain calm and composed, understanding that these dips are temporary. They know that short-term fluctuations are normal. These investors are not swayed by the daily ups and downs of the market. They focus on the long game, knowing that quality companies tend to thrive over time. By keeping their eyes on the horizon, they can make more informed and rational decisions. Imagine the stock market as a moody fellow named Mr. Market. Some days he's euphoric, other days he's downright depressed. Parikh saw these mood swings as opportunities. When Mr. Market is feeling down, he sells off stocks at bargain prices. That's when value investors get excited. They swoop in and buy those undervalued gems, knowing that Mr. Market's mood will eventually improve. But when Mr. Market gets overly enthusiastic, bidding up prices to unsustainable levels, value investors stay cautious. They know that what goes up must eventually come down. Parikh's book is full of wisdom, but here are a few key takeaways. Invest in businesses you understand, be patient and think long term. Don't follow the herd, and most importantly, control your emotions. He taught us that investing is not a get-rich-quick scheme. It's about compounding wealth slowly and steadily over time. It's like rolling a snowball downhill. It starts small, but it gathers momentum as it goes. By combining the principles of value investing with an understanding of behavioral finance, we can become more rational, disciplined, and successful investors. Parag Parikh left us with this thought-provoking quote: "Investing is simple but not easy." It's a reminder that while the concepts of value investing may seem straightforward, putting them into practice requires patience, discipline, and a deep understanding of ourselves. So, The next time you're tempted to make an impulsive investment decision, remember Parikh's words. Take a deep breath, think like a business owner, and don't let your emotions get the best of you. Happy investing. Thanks for watching. If you enjoyed the video, do me a favor and let me know in the comments. You can also let me know which book summary you'd like to see next. See you next time.